Longevity is arguably one of the most important trends of the 21st century. Back in 1965, global life expectancy was 55 years of age. Today, that figure has soared to over 70, and it's being extended all the time as medical science enhances healthcare and disease prevention. But this demographic shift presents both challenges and opportunities. Welcome to How to Invest by Julius Baer, where we look at how important it is to ensure your wealth lasts as long as you do. The world is home to over 8 billion people. By 2050, more than a quarter of these people will be over 65 years old across Europe, North America, and Asia Pacific. But with that progress comes new challenges. Traditional retirement models are under pressure. Multiple generations all living at once means inheritance and succession planning has become more complex. But there are opportunities too. Investments that were once closed to the over 60s are now open again. And as we save for a longer life, this is something you as an investor should consider. But first, let's take a look at traditional retirement models. Public pensions were built for shorter lives and larger workforces. And today, we're not just living longer, but our populations are shrinking too. South Korea's population peaked at approximately 51.8 million in 2020 and is projected to decline to around 39 million by 2060, according to the government estimates. This will have huge impacts on labour, manufacturing, healthcare, social services, and pension provision. Meanwhile, countries like Singapore and the Netherlands are already addressing these challenges by blending transfer and savings-based systems, adjusting retirement ages, and maintaining intergenerational fairness. In preparation for a longer life, asset accumulation is no longer optional. It's essential, especially if you want to avoid inflationary impacts on your finances. Simply saving your hard-earned cash won't protect you from general price rises. Remember our previous episode on inflation? We really dug down and explained just how much it reduces your purchasing power over time. Here's a quick example. Suppose you have saved 2.5 million Swiss francs for a retirement plan that will pay out 100,000 Swiss francs each year for the next 25 years. Wouldn't that be nice? Assuming an average annual inflation rate of 2%, let's see how it affects your savings. Well, in the first year, you'll be able to buy goods and services worth 100,000 Swiss francs with this plan. However, at 2% inflation, the same amount of money will only be able to purchase goods and services worth approximately 98,000 Swiss francs in the second year and just over 96,000 Swiss francs in the third year, and so on. Now, it doesn't sound like much of an impact, but over 25 years, the purchasing power of 100,000 Swiss francs would decrease significantly. In fact, 25 years later, purchasing power will equate to around 60,000 Swiss francs in today's money. That's a loss of nearly 40% over your 25-year retirement. Having your retirement savings invested helps ensure your finances can keep up with inflation. Now, we'll get on to just how to invest in a moment. But first, a quick note on another critical consideration when it comes to your wealth planning. Living longer doesn't just mean building a retirement fund. It also means passing on your wealth can be more complex too, as more generations of your family will be alive while you are. Now, not only will living longer potentially affect the inheritance tax that you pay, but it will also affect the timing and structure of inheritance planning. For example, grandparents may now be more likely to see their great-grandchildren reach adulthood, potentially altering the way they wish to distribute their assets. Building up robust family governance is key to long-term wealth sustainability. By acknowledging the impact of longevity on succession planning, families and businesses can better navigate the complexities and create a smoother transition of wealth, power, and responsibilities to the next generation. Now we know why we need to invest for the long term. Let's look at how and where to invest. More than just planning for your retirement and succession, longevity is a growing investment theme in itself, with the global phenomenon of people living longer bringing with it opportunities for investors. Our next generation research team has identified 5 business segments to watch: nutrition and healthcare, elder care, financial planning, beauty, and leisure. As the population ages, specific segments of the healthcare industry, such as pharmaceuticals and medical equipment, which cater to the growing medical needs of older adults, will become ever more important. Meanwhile, the global beauty industry is worth around $420 billion and is expected to remain resilient, driven by an aging population seeking anti-aging products. Meanwhile, travel and leisure activities are also set to see significant growth, with 85% of adults over 50 in the United States prioritizing travel and vacations. The cruise industry in particular is expected to rebound, with over half of all passengers above the age of 45. You can invest in these themes either directly by investing in the companies themselves or through funds that focus on longevity or healthcare. For those building a diversified portfolio, considering private markets is also a key part of preparing for the future. Not only can investing in new and developing longevity businesses give you access to this growing industry and trend, but private markets can also help you build a strong portfolio to support a longer lifespan. Traditionally, private markets mean you have to lock away your investments for up to and even over 10 years. So typically, this wasn't a good option for those nearing retirement age. But if we're living longer, even those over 60 can now realistically look to private markets as an important part of a long-term investment plan. Meanwhile, real estate investments can ensure you continue to receive income during your later years. Longevity is all about making sure your wealth can keep up with your health. Thinking about it as early as possible and investing over the long term will help you ensure that your money keeps up with inflation. In addition to your personal finances, the growing phenomenon of longevity presents investment opportunities in healthcare, elderly care, beauty, leisure, and financial planning over the longer term. Like and subscribe to Julius Baer's YouTube channel to stay up to date on how to invest.